All right, ladies and gentlemen, I hope you're having a wonderful evening. I have another late watch list for you. I'm even recovering a little bit, so I don't know. I might be a little slower or louder or quieter, depending on how it is, but we have the CPI tomorrow morning, and if you've been watching these watch lists, this has been the main theory we've been talking about because after this data now, we get into earnings season, and then we're really going to have an idea about how we're going to close out the year. And even last October, even that crazy bottom most hated, I don't know if that was the most hated rally. I think that was in July, but it was absolutely insane. And it looks like we might have the chance to do that. Or if we are going to go back to that volatility that we saw the last couple of days, it will probably be a result of data bad tomorrow and then all of the earnings getting bad after that. So we got a lot to talk about. I have a couple of different breakdowns for you. We will be live tomorrow, so I'm going to be live 1 hour before the bell, youtube.com/the stock market, but I will not have the same review. So I'll have some info. You may have to experience Josh AI, but I'm going to try not to talk as much tomorrow morning, but we will still be there. The chat will be up, all of that good stuff. So we'll see you there in the morning, and hopefully we find out where the market is going from here afterwards and are able to get into a lot more exciting stuff like earnings season. So Chad, drop your thumbs up on the video. Make sure you're subscribed. All the good stuff. I vibe with me, man. It's evening right now. I guess it's not like a fireside chat, but come on, or maybe you're watching this in the morning and then like maybe it sounds too chill for you. I don't know. Either way, but I love you. God bless you, and run it, baby.
Walking to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, ladies and gentlemen, the first thing I want to talk about is what happened today. There was two different things. One is the bond market, and the second thing is the Fed minutes. So I'll get to the intraday chart, and you'll be able to take a look at it. But the number one thing I've been highlighting as of late, and even like understanding some of the movements and getting ahead of this data that's important, the CPI tomorrow, the big thing is that the bonds have stabilized a little bit, even though they've been rallying last 4 days up. You even go look at the market. This has been a 4-day rally, but it's the fact that they are not dying. This is a 100-day chart. You see how just like absolutely slaughtered the bonds have been. And even everyone's like, how does the market go up? But that's a whole nother topic. But what you should go look at, it's like the last 14 days. You'll notice even the bonds, they're getting some stabilization. You've given up or you've regained the last week of losses, and that's good because every time the bond yields kept going higher and higher, bonds were going down, everybody was saying, well, wait a minute, how high is this going to go? And they were getting worried about what was going to happen. So that's why it's a big deal. You look at the SPY, it's about like 14 days. We're pretty much where we started in the 2 weeks. The bonds are still lower. So there's a little bit of gap that we've been talking about, and that's why I think tomorrow we got to be watching out for it. But if you're trying to understand, like, why do we go from all of these bad events, even like things like Israel, to, we're like in this weird economic mode and the market's just melting up, a lot has to do with the bonds because that was the reason why we started melting down in the first place. We didn't go crazy past those fives yet, and remember, that would have been the worry. People were talking very, very high numbers. So that's the first thing. Now for the minutes, this is a nice simple breakdown. I mean, my opinion of what happened today was that the minutes were a little bit outdated considering the rates have moved so much, but a big noticeable thing in the minutes was that they were talking about other risks. They talked about China, and they were bringing up the risk of tightening. And you'll see here, I think there's a line said that the focus would shift from how high to raise rates to how long, but we were kind of already aware of this, and that's why tomorrow's data is going to cement things. But the way I said it on stream was I didn't think the minutes were any more hawkish than last time, nor was it any more, dovish than the other time. Both the minutes and just think about the meeting that we just had. This was the Fed meeting where they literally said we're raising the terminal as well as kind of putting it on the table that we are ready to pause and have been paused for the last couple of months now. So that was all very important. I don't think you're going to shock the market beyond that. And now, like I'm saying, the way bonds are looking, markets, it seems like everybody is getting ready for that CPI. So you could read this breakdown. Hopefully you screenshot it again, unless you want the AI Josh to do it. You know what I'm saying? But either way, we had these two events. And even then, if you go look, we did rally after the minutes, even the bonds, but I wouldn't say that it was like people reacting and taking that in and being like, yeah, we're going to buy stocks and buy bonds right now. I just think it was all the preparation leading into the CPI tomorrow. So now let's talk about the CPI right before the bell, 1 hour. You guys should know the schedule by now, but the thing about tomorrow, there's a couple of ways that this is going to go right, that this is going to go wrong, but I will say this. The non-farm payrolls, that is making me approach this a lot more humble, in the sense that I was thinking that if the non-farms came in good, the market would not have liked that. However, if you were there last Friday, what happened? It was a blowout beat. The market did drop for like 2 hours, and then it violently went up, and that's the start of where we've been rallying from here. So that being said, the logic coming into tomorrow, and I'm like laughing a little bit because, Friday was a great example of, hey, welcome to the market. Anything could happen, because it should be, if inflation goes up, then we should have a negative reaction. And then if inflation goes down, then we should have a positive reaction. But although that doesn't leave you with an answer, I do have an answer for you. And simply, the real breakdown that I've gotten from all of this and this weird data is that we need to widen the range. And what I mean by that is that, like, it doesn't matter if it doesn't have to be on the money, beat or miss. And we're looking for like bigger percentages, but when it's all said and done, everybody is looking at things broadly speaking. So unless it is like a insane miss or beat, and even if it was, I don't think you would see the reaction, because everybody is stringing together data and kind of just looking at if it disrupts the broader narrative. So maybe you'll see what I'm saying here. This has to do with the shape and the super core. It's like, this is what is giving people, by taking a broader look, these little reasons and excuses. I think that's why we're watching rates do what they're doing in the market. It's just right now you're kind of on a weird autopilot. You need a real disruption to show that. So even if data comes in, it's, you're not going to get disrupted after one data set unless it is a complete emergency. So that being said, what I want you to see, these are the ways, like I'm saying, things could go right and wrong. This is headline, or this is core inflation. This alone, even if headline goes up and it's expected, I think, to come up a little bit, the shape of this coming down is what has people excited. If this noticeably drops, even then related to this CPI, one of the bigger factors, it's going to be gasoline. That was like last month, we've been talking about it. It kind of has stabilized, but remember, there is a big delay to this, and gasoline will have a big impact. So if there was a big impact on headline and core still keeps going down, like I'm saying, broadly speaking, the market, the no landing, the soft landing, everybody is loving that as long as the broader shape is still going down. So then you go here, that's the month over month. We'll go to the headline. This one says 3.7. I think it's Bloomberg has them at 3.8 for tomorrow. But as you see, core is still going down. Headline has been going up. This is what has people worried. And if core does go up and the shape does change dramatically, I keep going to that other chart, then people will get worried. That will probably be negative tomorrow. But in general, I don't think it's going to matter as much as headline. And even if core does go up and then headline goes down, even with the gas and then super core, like I'm saying, I think people are going to look at things broadly. And it's simple. Is tomorrow's data, broadly speaking, will it be good enough? It doesn't even have to be that good, but will it be bad enough to disrupt the end of the year party and then everything everybody wants to get ready for until next year? That'll probably be more precarious. So I think it's going to be interesting. I think it's going to open up the door of whether or not we rally, and that's why tomorrow, just be on the lookout for that. Look out for core, broader shape, and I want you to view tomorrow a lot more broadly rather than beat, miss, it's at the money, it's not at there, because I don't doubt that the market and everybody they're going to look to see, okay, how are we going to trade the rest of this month? Literally August, September, we did do reversals right around the middle. This would meet the criteria with October, so we just need a broader answer. However, if there's a wrench in the plans, don't forget there's going to be earnings right after, but this will be a great answer to trade off of up until a decent amount of earnings pass, and then it will be big earnings and then Powell. So, Chad, I hope you're ready for it. I hope I see you in the morning. And before I go, let us get into the plays. So, right off the bat, I do have a couple of plays. NVO, they came out with news about a kidney drug. Literally, the GLP-1, the Ozempic drugs are having a positive impact on people's kidneys. Dialysis stocks went down today, and this was really good for the stock. Even Eli Lilly went up, so this was all around good news. There's even stocks, I'm still holding that. Remember the other sympathy one, GPCR, they've been going up, and if you didn't see today, there's like Tempest and another one. It was another company like MRNTB or MRNB. We had it in the morning. It literally was on our morning headline list. There was a lot of weird random biotech movers. I went up like 200 to 2,000%, which is wild, but keep an eye out for this. That was really good news today. Then RTX, I did add 200 shares. We've been talking about it. I went in at like 73.06. I finally figured it would be time, so grabbed a little bit of there, and then we'll see. But it was down when I got it, and it's still pinned. It literally looks like oil, ironically enough, maybe with less upside than oil considering. And then there is Microsoft after the hours. There was like the IRS is like re-looking at their taxes and wants to assess like a $28 billion fine. So we'll see how that one plays out. But other than that, all about the CPI. We'll watch any, again, I think the GOP stuff might have its own little category. Otherwise, depending on how tomorrow is, if it's good, watch the bonds. I'm still in one of those bond plays. I think that's going to be a lot of fun either way, but we're going to get a lot of answers, then lead into earnings, and we'll see, banks and tech and everybody, even AI, don't forget about it. So it'll be very excited. But ladies and gentlemen, that is your watch list. Make sure Hydra Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, changes, small good decisions and small changes will add up to very big changes, and it won't feel like much is changing, but once you set the ball in motion, before you know it, you will be a same but different beast. My friend, what you are now is the foundation of what you are going to build into, and oh man, it's amazing. That's a lot of potential. Wow, my clap is so much louder than my voice. I love you. I don't know if y'all hear it the same, but I love you, Chad. I'll see you in the morning. Happy CPI day. Happy October, Halloween. Okay, I'll see you in the morning. Horn.